Welcome to the Profit Answer Man, Greg Crabtree. It's great to have you join us today.
Thanks for having me.
And I am excited to learn from you. Can you share a little bit about your business and how you help business owners?
Yeah, so I'm a recovering accountant. So as a kid that grew up on a chicken farm in Alabama, picked accounting as a profession because he worked in an air-conditioned office and didn't work out in the field or in a hot chicken house, in a very hot and humid place. Once I got into the profession, I had this moment the first year out of school going, oh my goodness, what did I do? But found a way, as many of us do, you find where you fit. And I found my niche in terms of not traditional accounting, but to use data to actually help entrepreneurs run a better business. And so there's a series of events that led me to starting my own practice in 1986. Did what small practitioners do. You do anything, for a buck. But in 2001, I ran across the Entrepreneurs Organization. That was, the first step of getting me out of my head of seeing myself as an accountant. Saw myself as an entrepreneur. And then I really kind of fell in love with the concept of really what entrepreneurs bring to the table. They don't get enough love and appreciation that they deserve because they do drive the economy. And so really I changed my focus in the early 2000s to really focus on serving the needs of the entrepreneur, and which led me to study client data without being paid for it, to go back to the source of data and let the data tell the story rather than the accounting books, the talking heads of the industry, whether it's the accounting industry or the financial markets. There's just a lot of bias in that information. And I go, hey, let's go back to the source, and fortunately, I had really good clients that I could, look at the data for that. I had clients that weren't so good businesses that I could look at the data for that. As I always say, if all else fails, you can always serve as the bad example. And so studying that data led to the first book, Simple Numbers, Straight Talk, Big Profits, released in 2011. And that was really my first attempt at helping entrepreneurs break away from traditional financial advice and look at businesses like the successful entrepreneurs did, but they just couldn't verbalize it. So I was kind of the conduit to pick out of their brain, what are you looking at? And it really comes down to, we called it simple numbers for a reason. There's just a handful of numbers that every business really works off of. And you can dive into the details all you want, but you're not going to change the outcome dramatically, except in these handful of numbers cases. Looking for the key levers that really turns a good business into a great business and turns a business on the brink of failure into a business of success. And so we continued studying that. We changed our focus of the practice to be consulting first. And then now we've merged with a national accounting firm, Carr, Riggs and Ingram, in 2020. And so our current practice, we're just a unit of that national firm called Simple Numbers, CRI. And so our practice is solely consulting now. So we'll do tax consulting, but we have like if our clients need tax services, we can get them to one of our other offices to do that. But we really have taken a focus on the business growth and profitability, consulting. And we feel like we've got a unique message that applies to any business, any industry, any country. We have clients all over the world. And so from that studying and seeing those different businesses, and the ones our superpower is we look at all businesses in the same structure. So we don't care what industry you're in. There's a simple numbers format that we look at all data through that lens. And one of the recent things that has been a game changer is, I started with a Simple Numbers 2.0 book that I released in 2020, but that book was a product of a data model that I started in 2013 of studying businesses on a next level basis. And we decided to keep that study model going. And so now we refer to that as our Simple Numbers 100 company model. And so we update that every month with 100 companies that we have access to data. These are just U.S. companies in the model, but all different industries, all different geographies. And we see it as our view of the economy. And we really think we've got probably more the correct view of anybody based on what we're seeing. And largely because the government doesn't have the data. The government doesn't have any sight of any private company data yet private companies make up over 60% of GDP. And so it's a really weakness of the U.S. economy of being able to see what actually is really going on in that process.
Even if they had the data, they probably manipulated it.
That may be true. Yeah, because I mean, I will tell you, because being somebody who we gather this data every month, we talk on it every month with our clients. There's a lot of subjectivity to it, and you have to read some of the tea leaves. And I'll give them latitude of interpretation. But what you don't see, so we put out the raw data. So here's what revenue growth. But see, when we see our model is like 1.3 billion of revenue. And so average company size is 13 million. But we don't include any companies that I think the largest company is close to 50 million in revenue, but we exclude our really high revenue clients from the model because they would be too distorted. But in looking at that, we look at the raw model and say, well, revenue went up, but there's two reasons why revenue goes up. You gain market share and you had price increases. And no company can tell you the exact impact of either of those. And so you've got to really kind of do some interpretations, looking at the data, and make that call. But I think our clients would probably tell you that we've probably had the most accurate read of the economy for the last 5 years than anybody they've listened to, because we've been studying it month and month and month and month. And like I said, we've been fortunate enough that we don't make a overly focus of one industry versus others. So we've got a tasting of most industries out there.
So what are you seeing right now? Thumbs up, thumbs down, sideways?
Sideways to slightly declining. I really think if you really could accurately measure the economy from January of 23 until present, we've been running to flat to minus 1% GDP, maybe a moment or two of plus 1%, but we're really in negative, probably 1% GDP, and more so especially in the last several months, since January, because I just look at it, like I said, I'm just a data guy. So take politics out of it. Let's just look at the data. Since January, there's probably been over 2 million deportations. So that's 2 million consumers that left the U.S. marketplace. So, I mean, forget about all the other politics. I mean, I'm not into that discussion. I'm just talking about you take 2 million consumers out of the marketplace, what happens to the economy? That's not a small number. And the self-deport people of about 1.6, 1.7 right now, those self-deported were producing and consuming. And you can argue that the forcibly deported were producing, and they were producing bad things. So yes, get the bad people out. Any rational person is going to be for that. But the others, I mean, you can make any policy decision you want. There's consequences to every decision. There's consequences if they stay. There's consequences if they leave. Hey, I'm just calling balls and strikes, here. And so in that case, then you look at the overall demographic. We've shut the border. There's no people coming across to replace them. The ordinary immigrant process is slow and not covering up for that in any means. And then when you look at the birth rate, the U.S. birth rate is 1.6 replacement birth rate and falling. Stable population is 2.1 replacement birth rate. So you just look at total population. And as I always like to remind everybody, hey, I'm just a kid that grew up on a chicken farm in Alabama. So what do I know? But the last time I checked, if you have a flat to declining total population, a flat to declining total workforce, how do you have an expanding economy? I mean, most people, the first response is AI and technology is going to increase production. Great. Last time I checked in my economic principles, if you have an increase in production and no increase in demand, what happens to prices? They fall. And we've seen that in certain sectors. We've seen some falling prices that has muted the official inflation number. But in the places that technology, so we deal in our 100 company model, we slice it between what we call the necessaries and the discretionaries. And it gives you an interesting view of the economy when you slice it that way. And guess what the necessaries are doing? Their revenue is going up, but they're just charging more. And they're charging.
I was going to say it's inflation.
They're not doing anymore. They're just charging more because they can. They're a necessary. The discretionaries, what's happening to them? Revenue's falling. And so in the discretionaries, you take the discretionary part of the economy and split it between two pieces. The upper end is the highly desired discretionary. They're holding steady and slightly declining. So, but they're selling to people who have extra money and can't afford it. If you are a necessary that can be a discretionary that can be postponed or done without, you're getting your head handed to you. And so when you look across all retail, you look across any discretionary services, we've got clients who do really good jobs in discretionary services. They're down 20, 30% in revenue. And I will dare any retailer to tell me that they've got a good story right now. If you're selling tangible goods, and especially if you're a brick and mortar business who your goods can be bought online. I mean, you've got to be charging convenience store prices to be a physical goods retailer almost, because the online, as much as we all do it, I do it. I buy stuff online for convenience because I don't want to go to the store, but I'm stealing sales that used to be the core bread and butter to have a physical store, to survive. And those stores that we're monitoring, they're holding on with their fingernails. They're hanging in for the game and saying, when is the uptick going to come? And the crop has been planted, but it hadn't come out of the ground, and I don't see any sprouts.
We still haven't had winter, as I call it. Until you can't have a new crop until you have winter.
Right.
And the last winter for most people was 08. It's been
Right.
a long, long time, and that's kind of where it's at.
But see, people use 08, but 08 wasn't a traditional recession. 08 was a liquidity crisis. It was stupid stuff going on in the real estate sector with mortgages and overbuilding of new homes. That quickly got fixed. I will tell you, 2009, 10, and 11 was three of the most profitable years our clients ever had. So you can't tell me that 08 really was a real recession. And so what we lived through, we call 2010 to 2020 the participation trophy economy.
Mm-hmm.
If you can go back and accurately measure GDP compared to other periods, which is a hard number, but I'm just going to throw this out there. I believe 2010 to 2020 was the 10 greatest true economic growth years ever in the history of the U.S. economy. Why? Because it was the last 10 years that the baby boomers worked. And we know this from long-term statistics. The last 10 years that you work are your highest producing, highest earning. And we saw this in our data that we were tracking. We were seeing double-digit true growth with little to no inflation in our models from 2010 to 2019. But in 2019, we saw this go to single digit before COVID. And that was 2019 was the starting of the baby boomers signing off and saying, sayonara, we're retired. We're going to the house. And that shrinkage initially of lack of labor kicked off this hyperinflation that stayed throughout the early stages of COVID. And people, COVID had an impact. We probably lost about 1 million or so, actual, working people, not just retirees, during COVID. That's not a small number. But it started this economic tilt that, if you follow people like Peter Zahn and those people that are following true population trends and don't believe any population data that the UN has, if you count real numbers, and we hit the wall in terms of population growth. And this is a time like none other that we've ever faced as an economy. And the talking heads, both in government and the marketplace, still has not factored into their thinking that we have fewer people to produce and consume, and the marketplace has to go through a reset. And that reset, I've stated this, we believe 2026 is going to be the year of optimization, not going to be a year of growth. Now, you may grow, but your market's not going to grow unless you're building AI data centers and producing chips with NVIDIA. Okay, yeah, you're in that little bubble over here. But the rest of us that are living everyday real life, we want to be the surviving company that is going to pick up the work that the 30% bad companies are going to leave because they can't compete. This uber growth environment that we've been in since 2010 has covered over a lot of weak businesses that you didn't have to be good during that participation trophy economy. You just had to be available and you could get by. And sometimes even the not good businesses were more profitable than the good businesses, which really was shocking. But you could get away with it because the economy was on fire. Now you drain the swamp and all we see is the stumps. And all right, those stumps are going to get pulled out. And those are the bad companies that can no longer compete because they're not good at what they do. They're sucking up good business that should gravitate to the stable, well capitalized, well executional businesses. And so, yes, I'm painting a dire picture of not economic growth, but it doesn't mean you don't grow. You're going to grow from market share, not market growth, going over the next 2 to 5 years. Convince me of where the market growth is going to be. Nobody's convinced me yet.
No, I appreciate it. And we have seen different sectors get hit over the last few years. I'm always asking this question, and no one's had a clear answer like you have as to what the factors are. The one thing that everyone does seem to always overlook is what you keep harping on, demographics. Like if the market shrinks and there's 2 million less people buying, then you're going to sell less stuff. It's just common sense.
Right.
And you've got doubles there of that population and the decline of the baby boomers were one of the largest populations out there. I'm just at the edge of it. And as the baby boomers came into the market, they drove up the cost of real estate. They drove up everything. Like everything followed them coming into the marketplace. So as they leave, it makes sense that that all drops. And actually, we were having a conversation on real estate just recently. If there's less people, we don't have a demand for housing anymore.
Right.
And we don't have a demand for apartments. Now, is that going to change tomorrow or in 2026? Absolutely not.
Right.
But is it going to change 10, 20, 30 years down the road?
Long term, it will. Yeah.
Long term, it will. And so those are the things that are shifting. Again, the baby boomers are living a little bit longer, working a little longer. So there are other shifts. But at the end of the day, it comes down to what you and I love, which is the math. If the math says it's not going to math, that's just the reality of it. So let's get back to business owners and how we can help them. You made a comment early on that I want to touch base on. Accounting people and finance people don't seem to talk the language of entrepreneurs, do they?
Exactly not. No. And realistically, I mean, it's why we created the simple numbers format of looking at data, because I built it around, talking to my entrepreneurs of what are you looking at? And it comes down to, a couple of critical factors. Number one is, I don't care what business you're in anywhere in the world, if you're in an operating business. Now, so when I talk about entrepreneurs, I'm talking about people that buy and sell every day in everyday transactions. They're not an investor, not a buy a piece of land, sell a piece of land. You're building a building, you're providing a service, you're selling a good. I mean, that's operating businesses. This is every operating business in the world leverages labor, and it's not about creating revenue. So the first building block of simple numbers is leveraging labor, all labor. I don't care if it's direct labor or management labor or sales labor. It's all y'all labor, like we say in the South. And so it's all y'all labor. How much gross margin do you get off of that labor, and not revenue, because every revenue dollar isn't equal. And so we've created this concept in simple numbers of taking revenue minus cost of goods sold that does not include labor. So your materials, subcontractors, any pass-through cost. Because when you get down to gross margin, it's going to take a little bit of that height off your big hat, that you got. But that's gross margin is the real economic top line of the business. And so every metric that we started using is really built around targeting to that gross margin number, not the revenue number. Revenue is a slippery snake. So if you're talking revenue in your business, stop it. Talk about gross margin. Teach your people to understand gross margin, not revenue. And please, 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 please never pay sales commissions on revenue. Pay on gross margin. I mean, some of the classic, just stupid decisions that I've ever seen are people paying commissions on revenue. So anyway, when when you focus on that revenue, we've been able, in my first book, I did make a statement, 10% to profit to revenue is the new break even. But that only worked about 70% of the time because there were business models that were high, low gross margin, high cost of goods sold. And so we continue to study and then as we come out with Simple Numbers 2.0, we've done more research. And now my guidance is, hey, there's a minimum set of profit standards that is profit to gross margin, not revenue. I want you to add a minimum of 15% profit to gross margin, a target of 20% to profit to gross margin, and a stretch is 25% profit to gross margin. Now, if you're below 15% profit to gross margin, I'm telling you, you got some work to do because you're in danger. You go down fast if you're below that number because you just don't have enough profitability to deal with a punch to the gut. When you're at 20%, really good territory. But when you're at 25% and above, and we see some businesses temporarily at above 25% profit to gross margin, there's one of two factors present. You're selling to all of the stupid customers that overpay for things, and that's as big as you're going to get. You found them. You found all the stupid, non-price sensitive customers. Congratulations. The next customer that you sell to is going to tank that profit percentage if you want to grow. Now, and you have a decision to make, and it's up to you. You can be a niche player selling to all the stupid, non-price sensitive customers, and if you buy into being bigger, okay, you're going to crater those sales because nobody is being able, I've never seen anybody do this, maintain your high price to the stupid overpaying customers and then sell to more price sensitive customers and keep both in line. No, once you start offering that lower price to get to that next more price sensitive customers, the top crashes down to that price point, and you're toast at that point. So that's kind of one thing. The other thing is we do see some smaller businesses. So I'm saying 2 million and below. If you can have above 25% profit to gross margin, but you're getting away with it because you have no real significant operating expenses. You're actually almost not a legitimate business. That if you really want to get beyond the 1 to 2 million range and be competitive to get to a 5 million size business, you would have to add infrastructure that would bring you back down. You'd probably still be 20% profit gross margin, but you're still looking at this. Your conundrum is this. You have to drop your current profitability down to even maybe almost lose money temporarily to get through that growth phase to get back to just a 20% profit gross margin, but you're twice as big. And it's like a lot of businesses right now are making the decision to stay small, have no operating expenses to speak of, and just harvest that little segment. And I mean that's not a bad decision, but it shows you the relative weaknesses of what I've just explained. I've never met an accountant that has talked about business in stratifying, where you sit and the strategy of where you go. And even the business people out there that talk about business, they just don't understand the numbers. They just, they're just like, carnival barkers are saying, grow, 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 Well, not all growth is good, but not all staying, you've got to know the why where you're at. And is where I'm at a good place? If it is, okay, stay there. If growing is not going to add dollars to the bottom line, why grow? And we've seen many a client, contrary to good advice, grow broke, and that does happen.
More often than you imagine. Not you, but everyone else, because it
Everyone else, yeah.
happens. I was lucky that I found your book early on when I started my business. And so we've always put labor efficiency ratios on our dashboards for our clients so that we can say, hey, this is what's going on. And a lot of times what I find is, especially in smaller businesses, their labor efficiency ratios are horrific. I mean, below 2.
Yeah.
And I just say to them, look, for every dollar you spend, and I've had some where I'm like, you realize for every dollar you spend on labor, you're getting 75 cents in gross profit. You're losing money. Like your business model is broken. But even if they're making $1.50, I'm like, you can't run your business on that. You don't have enough overhead to cover your overhead. And I think a lot of times they don't realize it. They just go, well, I'll sell more. And sell more doesn't fix the problem. And so that's the biggest thing we've done. We've
Right.
broken it down. I use different numbers than you do, but we focus on certain major things. Big believer, just like you, in gross profit, and big believer, and that's how you pay salespeople, because salespeople will discount your gross profit away if you
Yeah.
don't. And
Yeah.
so you have to do that. And then having a simple dashboard with the most important metrics for your particular business,
Yeah.
and then doing the math for the growth. I can tell you that I can show two companies that are going to grow from 2 to 10 million, and one of them does it extremely well and makes money, and the other one, just because of the way they do deposits, the way they do pricing, the way they do their accounts payable, receivable, and inventory, can go broke on the journey.
Yep. Absolutely.
And I don't think a lot of people realize, to go from that 2-3 million up to the next level, you are in that, what I call the squish zone, where it's very hard to pay the people you need and to make the growth you do and still stay profitable. And at the end of the day, that's what we're all about. I didn't even get to my first question, which was about profit. First, you're in the book, right?
Yeah.
I know you influenced Mike on a couple things with that. You want to chat about that real
Yeah,
quick?
yeah, we both align on the concept of being fully capitalized and having cash, and so realistically, I think I mentioned in the number that he recommends for the 2 months. We refer to it as the core capital target, the 2 months worth of operating expenses in cash before turning over the business. I Somewhere along the line, business sold out their mindset and their heart to the banks in the financial markets, thinking that you can't grow without debt. And I was like, we have businesses all the time that have never had a dime of debt. And I show an example in the Simple Numbers 2.0 book of a client that grew from $700,000 of revenue to 10 million in 5 years. We show their data. We don't tell you what industry they're in, but it's legal. And and so they grew from 700,000 in revenue to 10 million in 5 years, and were profitable along the way, and never borrowed a dime of debt to do it. And they were, I mean, it's just having a mindset of being capital efficient and being profitable. And one of the things that the financial industry just falls all over themselves and doesn't have a good way of talking about it is the capital side of the business. When I teach classes to entrepreneurs, I always say, that balance sheet, the thing you don't look at, that's kind of important. And if we can teach businesses how to have the right amount of cash, be capital efficient for whether or not you have a accounts receivable, inventory, use of vendors for accounts payable, getting deposits up front, and having deferred revenue. The blending of all of those things are, when you play all those cards the right way, most businesses can grow because there's growth budget in your operating model to really create all the growth. You just have to be good at executing. Most people end up trying to throw money to aggressively grow when the money's in your budget. You're just paying people that aren't capable of creating growth. And so go get a salesperson that can win you a new customer. Invest in good market presence capabilities for your marketing. And I will tell you, the marketing area in business right now is in a state of absolute chaos. I'm telling you, it's with AdWords and pay-per-click becoming a thing of the past, and all with AI search being the dominant way that people are finding you. What's old is now new. It's all about your content, and the tools to self-create good content now are just out of the world. But yet a lot of people just don't possess natural creativity or whatever. There's still a place for guidance, but the marketing industry had gotten sloppy and lazy about just reselling, buying Google AdWords and pay-per-clicks, and that's a thing of the past. And what's really shocking, I mean, I know this will shock you. The thing that has created the most sales growth for our clients recently, a human actually talking to another human to sell them something. Now, I know that's crazy talk, but, and get this, apologies to all the professional sales coaches out there, but this is just empirical evidence of what we've seen. The people who have been the most successful at that human to human sales are people that have never darkened the day of a professional sales class. They are authentic people representing your business that are product and service knowledgeable and care about people. I mean, like I said, that's just crazy talk, amongst all of these people. We all sell services and help. And not to say that you can't benefit from professional sales guidance and consulting, but I'm just telling you like I said, we're just calling balls and strikes here. This is what we see across we got about 250 active consulting clients we touch every month, in our process. And we just look at, hey, what's working, what's not, here's the breadcrumbs to success. And that's what we see.
And I agree with you. For years now, we've told our clients who are looking for, especially like consumer sales in the trades and so forth, postcards. They're cheap. They last. You send a postcard and somebody needs a new roof and they forget about it. They put the postcard on the table. You buy a Facebook ad, it's gone in 2 seconds and they can never find it again. So
Right.
The second thing, like you said, and I think this is actually because of AI, because you go on social media now and everything's fake, because all of us business owners get 100 emails a day that are all scams, right? People pretending this, that, fix your credit card. Person to person, hey, can I touch you? Are you real? Okay, now I can at least start to have a conversation. And so I think going back to the person to person works. The second part of what you said, I was in sales for most of my life, but I wasn't a traditional salesperson. What I did was I listened to the customer. What an amazing concept. I understood what their problem was, and I showed them how to solve it with our solution. And that's really what business is. And this is where business owners also get confused. Customer has a problem and they want a solution. Most business owners focus on how great their solution is. The customer doesn't give a crap. What they care is that they get a solution that works for them. And so don't focus on your solution. Focus on the result the customer is going to experience, right? People don't buy a drill because they want to put a hole in the wall. They buy a drill because of what that hole will allow them to achieve.
Yeah.
And
So
so
this is
it's
kind of
understanding that.
yeah. So I do some of the accelerator classes for EOs. And so I got a couple of cities. And so we're in strategy day season. And so I'm doing a strategy day exercise for the ones that I do. And I've kind of boiled down the simple numbers business strategy is this: 3 steps. Number 1, figure out what the market needs. What does they need? Now, I don't care what you do, what you think you do, but if you don't figure out what the market needs, you're missing the mark. And that's what drove what we do today versus what I started doing, because I stopped listening to the accountants of the world and I started listening to the entrepreneurs of the world. And they set me straight pretty quick. And my profession is missing the mark probably bigger than any profession out there in terms of, I know people think we convince them that certain things that they need, but I'm telling you, we are missing the mark of what they truly need. But every industry has that. And so you've got, and you can't do a survey and get an answer. You've got to use your entrepreneurial senses to talk to people and connect with them. But figure out what the market needs. Second step, find a way to deliver that need profitably. Because if I can't deliver that need profitably, like I said, that's revenue without profit. That's all hat with no cattle. And so it's not, doesn't work. And then if I can figure out a way to deliver it profitably, and that's leveraging labor with every available tech tool and just the right people that get it, and do that. And there's a blend of those two. But the third thing is, okay, I got step 1, step 2, tell everybody about it. Now, what's your marketing strategy? And that has shifted. And I am surprised as anybody with the sales comment that I made, because leading up to COVID, you had seen this barrier to communication of getting higher and higher and higher, and people were in these impenetrable towers that you couldn't get any human contact. They didn't want human contact. For some strange reason, people are open. to listening to, hey, you got a better idea? And I really think it goes in companionship with the current economy is in such a disruptive state that people think I got to be open to something that I'm not thinking about. And I need to listen to somebody. And if you go in there with that attitude of genuine, even you might give them a solution that you don't do. Said, listen, what I do, that's not in your best interest, but here's what, if I'm sitting in your shoes, here's what I know about your need is and the way to solve it, and go talk to these guys. And I think, and it's like the marketplace needs a little more of that mindset. Do what you're good at and then share work with people that are better at you than things that you don't need to do. And you might end up with a long-time customer.
We're going back to where we were. It's a circle,
Mm-hmm.
right? You
Yep.
go around the circle and it's going back. The one thing I will say is there's a second part to that that I think sometimes is missed. What is it that people want and are willing to pay for enough that you can make a profit? Because there's a lot of things people want, but they don't necessarily aren't willing to pay for them. And we get confused with that. And especially when we ask our friends, they tell you, oh, that's great. You should go do that. If they're not voting with their dollars, they're not voting.
Right.
And so you need the data to say, is somebody actually willing to pay for this? And before you build it, go sell it. You can pre-sell stuff before you build it to
Right.
see if it
But you also need, and to that point, you need to understand how many customers are in the market at every price point. And so I always talk about the price elasticity curve. Nordstrom has the highest price, least amount of customers. Walmart has the lowest price, greatest amount of customers. You probably don't want to be either one. You want to live in the elbow of that curve. And are you on the upward sloping part of that curve, or the bigger customers but lower available market price? And there's a different amount of available customers at every price, and access along that curve. The other thing, and this is one of the joys that I get to do, I get to chair the EO Executive Ed program at Wharton Business School each year. And David Wessel's the lead professor, is just a phenomenal person. Gad Allen is the professor that does the operations excellence. The two, again, I just have learned so much from the two of them. But David has this phrase that I love that every entrepreneur needs to understand. Sometimes you need to change your where, not your share. So you have a good business. It grows to, $1 million of revenue. But are you better off trying to grow that location to 2 million, or open up another location in a more fertile market to get that to 750 to $1 million? And not every business is locational dependent. We created our consulting practice. I mean, when I started doing business, when I joined EO in 2001, we had a barely qualifying $1 million practice of all Huntsville, Alabama clients. Today, 98% of our revenue does not come from Huntsville, and we're about $7 million practice. And so throughout that transition to not being geographically dependent in our service offering, people kept asking, when are you going to open an office here, open an office? And I said, well, why do I need to open an office? I mean, I'll fly, I'll drive, whatever the need, to any city that I need to be in front of somebody when needed. And not, because I looked at that client acquisition travel cost as a facilities cost, that in lieu of having a facility and dead cost that sits there whether it's used or not. I'll just jump on the plane wherever I need to. And with that mindset, I mean, the whole world, just kind of opened up, in that process. Sometimes there need, but there again, you got to think in a broader context of, do you need facilities? I got a client right now in the building products space that he is very physically dependent on one location. But he can stand up a second location with very little cost in a marketplace that's far enough away from the existing location that he doesn't steal sales, and it's actually a more up and coming growth marketplace for his product. And that makes all the sense in the world.
That it does. And now with the world of Zoom, it makes it much easier to go around the entire country. And when I built my business, we were on Zoom prior to COVID, and COVID just kind of pushed it and helped it grow. Speaking of customers and price levels, I always like to tell the story to entrepreneurs of the apple tree. If you
Mm.
go out this fall and you go pick apples on the apple tree, the first time you go out there, you don't have to do anything, right? They're on the ground, there's low hanging fruit. You start picking apples, you go, oh, this is so easy. I can make a massive business. You come back a few days later and now you got to reach for those apples, right? Because you picked up the easy ones. You come back a few days later and you're like, oh, I need a ladder. No big deal. I'll use a ladder. And by the time you finish with the ladder, you need a bucket truck. And the bucket truck's expensive, right? And now you're picking fewer apples
Yeah.
and you wonder why you're no longer profitable. It's
Yeah.
because you saturated that particular market. And I don't think people sit down and actually look at the market size, the
Mm.
demographics, put the numbers together and say, is this going to math? And like you said, I think people
Mm.
think it's a lot more complicated than it is. It's
Yeah.
not calculus. Everything I do is plus, minus, multiplication, and division,
Yeah.
right? And with those fifth grade math skills, not even fifth grade, you can look at your business with clarity, with
Yeah.
simple numbers, and make the right decisions.
Yeah. And so, we live in a time that's going to be explosive in terms of understanding and from data. When we do segment analysis in simple numbers, I refer to this as the profit cube. So the profit cube, think of in a perfect world, I can see my business in total. I can see it by location, by line of business, by product, by customer, by team, and in a service business, by person. Now, when you do segment analysis, the art that I've learned through experience is not like we were taught in accounting school. This is where I depart from my brethren in the accounting profession because they just don't run a business. The people that run a business says the segments is you keep in a segment revenue, COGS, and direct labor, those three. If I can't allocate labor, just revenue and COGS is better than nothing. And then every cost that cannot be turned on or off with that segment of whatever by location, by line of business, whatever we're talking about, I keep over in a separate bucket of these are the non-turn off expenses. I mean, that's the nut that I got to get over with the margin of creation of those other things. And I learned this early on in my career. I was a controller for a bank for 3 years, and I did the first ever branch profitability report. And as a dutiful accountant, I took all of the overhead expenses and I spread them ratably across all the branches. And everything balanced, and I was very proud of myself. And I sent out the report. And all I got was weeping and gnashing of teeth from every branch manager going, no, I don't have any responsibility for that cost. That's not on me. And I listened to them and I go, they're right. So I redid it is the way that I just explained. And I've been using that sense of I only took their relative income, their relative expenses, and our branches that were loan generators, they had to pay cost of money to the branches that were deposit generators and vice versa. And I reproduced, and then I had this unallocated overhead that's, hey, this is the chassis that here's our engine from all of our branches, and we got to have enough energy and horsepower from this engine to drag this chassis around. And are we going to be a big, slow moving vehicle, or are we going to be a sports car? And so the stronger your engine is, now your engine can't be so strong that you don't have a strong enough chassis and the engine overpowers the chassis. Yeah, it works that way too. But I can't have a pipsqueak engine and a big chassis and that can't pull a hill. And that has served our clients. And with this new world of being able to take AI tools and lower our time that we take to gather data and reorganize it in a much more useful fashion, we're going to see simple numbers explode here, over the next couple of years, because we're going to be able to really help businesses with even less cost. We don't have to spend the human time to go grab the data. We can spend the time teaching them these concepts and helping them form that strategy in a much more effective environment, rather than, okay, we spent all the money in the budget, to just, here's the report. Well, if you don't have time to tease it out and talk to it and do scenario planning, here's what this decision looks like. Here's what this decision looks like. And that's the world that we're entering into, that the people that use these tools to their best advantage, I mean, they're going to dominate the market. So even though we don't have a growing economy, I see the top 25% of every marketplace becoming great businesses. I mean, they may be a good business now. If you execute in this kind of marketplace, you're going to love this marketplace. You don't need growth. You will take business away from your competitors because they can't compete.
And I do concur with that. I think there is always opportunities out there, and the world is changing. And I think in some senses you have to be better. In the past, I think people just expected business. It's not going to be the case going forward. You have to be able to do that. And I think one of the biggest things, though, is, and I've seen this, business owners don't look at their dashboards. They don't look at their financial reports. They need somebody to interpret it for them and say, hey, these are the couple things you should be aware of, and these are the things. And then when it comes down to planning, being there with them to show them how their plan maths out and what the different options look like. And when a business owner sees that, they're like, I want that one. And it's like, great, we'll build that. Now you know what to do. Go make it happen.
Well, to that point, I believe a lot of business owners don't look at dashboards now because they're late and they're not accurate. And if you can orchestrate this kind of thinking, how to say this. All right. So
be blunt.
When I do a survey every year that I do my Horton class, and I ask them, what is the highest level of accounting person that you have on staff? And then I ask them a second question, how long does it take you to close the books? Invariably, the higher the level accountant you have on staff, the slower it takes to get data out of the system. And that is just backwards. And it just drives me nuts. We do not teach speed from a professional standard of industry accounting. But I learned in 1983 with a first generation PC, with a first generation Lotus 123 program, I took my bank's financial data that my predecessor, God bless him, he was a great guy, but he was not an accountant. He delivered bad data the day of the board meeting, the third week of the month. And I took that first generation PC and I produced the full suite of budget, variance, and all different manners of board reports by noon of the first day of the month. And I didn't miss. I didn't change it. And so I just applied Eli Goldrat's version of bottleneck breaking, of break the bottlenecks and work backwards until you solve all of them. And that's not what we think. We as an industry, we think in time. Well, I don't need to sell them time. I need to sell them a result. And if you got more time in it, you just got more cost. You don't actually have more value. And it goes the other way.
He wrote a big book on it. The Goal. He did.
Absolutely. One of the best books ever written.
Yeah. I out of this whole book, which is really, really thick, I think there was one thing that really just drove it home for me. And it's the simple answer to three questions. What do we want to change? What do we want to change it to? And how to cause the change? Because that's about it. Wait, what do you want for your numbers? Where do you want to change them to? And how do we go about making the change? We create more bottlenecks than I can imagine. And I'm married to a CPA, so I see it all the time. And I talk to all the accountants for my clients, and I just I don't understand why you're not working in the books more often and you wait till 10 days past the end of the month to even start working. You're just going to be behind. Clean everything up so that it goes like this.
Yeah.
And yet they don't.
But there again, as a profession, we sell the market what we do. We do not do what the market needs. But there's not enough people like us to turn. I'll tell you, with the tools that are available, it's coming. And we see it in all of the leading entrepreneurs that have taken this into their own hands, and they've minimized the role of the outside CPA and maximized the internal operating data. And the one trend that we see in internal operations is the operations leaders that don't have an accounting degree are more involved in creating the data than accountants. So the current technology platforms, I refer to this as the democratization of technology. So it's putting technology into the hands of the people that use it and they can marshal that technology to what they need rather than I don't have to involve an intermediary to get what I need. And that is a game changer.
That it is. Take
Yeah.
control, figure it out, build it for you. And that's why what we do is to create our dashboards for our clients' needs, not ours.
Right.
Like what's most important to them? How do we make it work for them? And then we provide it with them.
And so every time we talk about a dashboard, I've got two requirements for dashboards. Number one is, do you actually even have the data? And so there's the first challenge to create an effective dashboard. And so you got some work to do. But like I said, we're entering into an age that access to that data, if you structure it and think properly, it's more extractable on a real-time basis now than it's ever been. So number two, before you can put a number on the dashboard, tell me what different decision you're going to make because of that number you're looking at. And if you can't tell me that how you're going to act differently because of what that number says, do not put it on a dashboard.
And I think most of our dashboards at the core are probably about 5 or 6 numbers for each month at the core.
That's good.
And then beyond that, it's nice to haves or if they don't always have the rest of the data, so we can't put it on there.
Yeah,
but
the rest of the data is valid for backup to what the leading number says. I accept that.
Right. Yeah. And part of it is, at least for the clients I deal with, a lot of them don't have the leading indicators of, how many leads have come in. Some of them do have better ones in that. And if we can get that, we add it in. But yes, we try and keep it as simple as possible. But more important is, here's what the numbers say. What action are we going to take because of the numbers? And what are we going to do to achieve the goals that we wanted to achieve?
So the one A+ dashboard number that I want every client to know, what is the total labor efficiency number that I need to achieve 20% profit to gross margin? So gross margin divided by all labor, I don't care. And if once you know that number, more than likely that number is going to fall for most businesses between 1.9 to 2.1. I mean, 80+% of the businesses in the developed economies function off of that equation. If you are a skinny OpEx company, you can probably get 175. If you're a retailer, distributor, or a union company, you need 2.5. So there, I've just given you 90% of the businesses in the world numbers. All right. So whatever your number is, and it's an easy number to calculate, you start the first day of the month of saying, so we'll talk about November coming up. You know today how much labor you're going to spend in November within a small variance. So let's say it's $100,000. Great. $100,000 times 2, 200,000. 200,000 gross margin, not revenue, gross margin. And so have you sold enough now for November to produce 200,000 of gross margin? Yes, great. Can your team execute on that work to get 200,000? So you know it on the first day of the month. And if they can do that, great. If they can't, you go into, did I price we call it the 3 Ps. Did I price the work effectively? This is step one, because you got to defend your labor, and nobody else is going to do it but you. Number two, do you have the right processes? Go back to the goal in Eli Goldratt's book. What do you have? Do you have processes for world-class execution? And if you have 1 and 2 covered and you can't get it done, there's only the 3rd P. You got the wrong people. And what are you going to do about it?
If essentially what you're telling me is labor is 50% of gross margin, correct?
Yes.
Yes.
In most cases, yes.
And
absolutely.
If I want 20% gross profit, that's now 70%.
What you want 20% of
net profit.
Net profit to gross margin.
That means my overhead budget is 30% of gross margin. And I got to run my company on that. It's a constraint. It's one of the cool things about Profit First is, hey, here's a constraint. Here's Parkinson's law. Work within it. And if you're spending an additional dollar, it's coming out of your pockets.
Yeah. So in that case, Eli Goldratt painted this picture of constraints as negatives. And to your point, you and I both agree to this. There are positive constraints.
Mm-hmm.
And so, Mike's process in Profit Worst, and we use a lot of those same kind of things. The salary cap is a positive constraint.
It is.
Exactly. And so now, if you can't produce, what are you going, if you can't overcome that positive constraint, what action are you going to take? And it's going to require action of some sort.
And I think that's the biggest thing we do is we turn their numbers into action steps.
Right, exactly.
And then we hold them accountable.
Which the accountability part is huge.
Yeah.
Nobody likes accountability, but I'm telling you, everybody who allows them to be accountable to somebody, they outperform those people that are not accountable.
And accountability for us is, hey, this is what you said you were going to do in your business. We're here to help you achieve it. Do you or do you not? I'm not going to do anything if you don't want to do it. That's your problem. But I'm here to tell you said you were going to do X. Are you going to do it? And is this what you want to achieve in your business? And if so, hey, great. We'll help you achieve it. If people would like to learn more about you, the books, how do they find you?
Yeah. So I've got a speaker website that is an easy connection to the books to links you over to the Amazon. So gregcrabtree.net is a good place to just look at that content. And we've done some extra other content, on that site, around the books. If you're interested in help of deploying these concepts, simplenumberscri.com is the website for our practice. But at the end of the day, I'm probably the easiest person to find in the world. If you Google or AI search Greg Crabtree or Simple Numbers, you'll find me, because I used to get abused having a last name of Crabtree as a child, and I love it as an adult because there's not too many of us out there.
I'm lucky too. There's only one of me, and so
That's right.
I own Google and I own AI.
Yeah.
Thank you so much for joining us today.
Well, really enjoy it, Rocky. I appreciate it, and happy to chat anytime.
Hey, thanks for listening to the entire unedited video of the Profit Answer Man podcast. You can actually get the full podcast in audio only format here on YouTube or any other of your favorite podcast players. Don't forget to go check out episodes 1 through 13. They lay out the foundation of Profit First in the book and how to get started. In addition, we've got hundreds of episodes for you to check out. And if you remember to subscribe, you'll always be updated when we put a new one out every single week. Thanks for listening. Have a profitable week.